Let's talk about oil because there are some worrying signs developing in the oil market for 2025. The oil bulls really need to pay attention. This could get ugly. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. So, the oil market has been a big disappointment in 2024. If you were a long trader, and let's jump right into the charts. This is WTI. Look at this. In this year, you could make money on the short side if you had cojones of steel, no doubt, but really it was a nothing market. But the developments overall, if we look at the charts, are not very encouraging for the bulls, and there's a real danger zone. So this is the daily. We have the downtrend that basically started after the oil price spike after the Russian-Ukrainian war started. And ever since then, the oil price has decreased. You see, we hit this yellow support zone that has held up like a champion and offered really interesting long swing trading opportunities. And this is the perfect swing trading setup, right? I had this one right here, I think. I know I played this one. But as you can see, the rebounds have gotten smaller and smaller. We're seeing a downtrending triangle formation consisting of the downtrend and the support zone. And as you can see, we're getting to the very, very top of it. So that means this triangle formation will be resolved in a breakout coming in 2025 in one direction. And as technical analysis teaches us, if a commodity, a stock, a currency, a crypto, whatever it is, has been in a formation like this for a long, long time without breaking out, the breakout will be massive. Massive to the upside, massive to the downside. Right now, we have to favor the downside. Why is this? It's basically three reasons. The first reason is the market psychology is quite negative for oil. And understandably so. If you look at the oil price and you look at the chart, I mean, we have a war in Middle East and now the Syria situation, and the oil price is doing nothing. This alone would have been like a $20 per barrel jump 10 years ago, 15 years ago. And we got nothing out of it. Second thing, Chinese economy is really struggling. The official numbers are not very good. We all know the official numbers are fake. The numbers that more independent sources gather by measuring electricity consumption and these type of things suggest that the real economic output in China is about 20% below the numbers that the government states. Plus, they are buying the oil from Russia on a discount, so they're not even in the open market to buy oil. And then we have the US situation with Trump, and that is the big one. Trump, he stands for fossil fuels, he stands for drill baby drill. He makes no bones about it. That's what he wants to do. They want to increase the US production capacities by 3 million barrels per day, from 13.5 million barrels per day to 16.5 million barrels per day, which would make the US the largest oil, or the country with the largest oil producing capacity in the world. Larger than Saudi Arabia, larger than Russia by about 20% each. The US is self-sufficient providing itself with oil. And that's the difference to the 70s, the 80s, the 90s, even the past commodity rally in the first decades of the 2000s. And that's why the oil demand has gone down. If you hear these people telling you $200 oil is coming, no, it's not coming. It isn't. Why? Because we have three countries, three huge producers that want to get the oil out because they want to sell it on the markets that are competing: Saudi Arabia, Russia, and the US. And we're not even talking about countries like Brazil, for example, that are also big exporters of oil. And obviously the other Middle Eastern countries and OPEC countries. So there's a surplus of oil. It could only be absorbed if economies around the globe are doing well, because now we know that the US doesn't need to buy oil on the open market. Who needs to buy oil on the open market? Europe. Well, Europe is in deep shit if you look at the economy. So China, that would be the other one, or India, but they're buying from Russia. So the fundamental situation favors the downside, and this is where this goes if we talk about the downside. Let me switch to the weekly here. This is a big support zone, the blue zone. As you can see, this goes back all the way to 1991. All right, it doesn't get more long-term than this. If we break below this yellow support zone, as you can see, there's a good first support area around 54, 52. But anytime we broke below it, as you can see here, 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 we went down to the blue support zone. We're talking about $40 per barrel oil if we break below this yellow support zone. So be very, very careful if you are a long trader in 2025 in oil. If you're a big oil fan, you really need to have your Zen moment coming out and being like, okay, maybe I need to take a step back and look at the fundamental facts and the charts and see what the situation really looks like. This doesn't look good. This will, though, offer a major trading opportunity. If we get down to $40, this is really interesting. Again, let me share the chart with you. Look what happened every time we went down to 40. Rally, rally, rally. It takes a while usually because this is a big support zone, and obviously the market needs to sort itself out, right? We saw it here, sorted itself out, boom, monster rally. Went back in it, tried to break below it, nothing happened, sorted itself out. This took a long time here. Boom, rally. Went back, this was quick. When this is COVID, so we can even cross this out, but here sorted itself out. Then we had the monster rally. And really, it was kind of stalling out again at this area. And then all this here obviously is the Russian-Ukrainian escalations, and then the war started. The second really interesting trade in the oil sector once we get down to 40 will be the American oil producers, Exxon, for example. Now they will take a hit, the stocks will take a hit when the oil price goes down. But because of drill baby drill, they'll be able to get access to new oil fields, to expanded production capacities for the future that will more than offset the short-term losses because of the lower oil prices and make these companies really attractive for the future. Also, remember, this is not like 15, 20 years ago. The oil companies, the American oil companies, and I'll do a separate video on this. Man, I'll do a lot of videos over the holidays, but you'll get a lot of really good information about this. because this is very important to know. The American oil companies have become very, very efficient, cost efficient in their production in the past years. So they can handle $40 oil for a little while. If that's the price they have to pay to get access to new oil fields in Alaska, in the US, that's a price worth paying for them in the long term. So if the oil stocks go down because oil goes down, and then it'll be a big, you'll see it on CNBC and everywhere. Oh, oil is at 40, the oil industry is crashing, what's happening? Everybody's selling oil, sentiment is going to be in the toilet. That is when you want to look at the charts of the American oil producers and the American oil industry and start buying these stocks. There'll be great dividend investments, there'll be great swing trades, there'll even be great long-term investment opportunities. And here at Hot Trades of the Day, that's definitely what we're going to do. And we're going to look at these stocks like a hawk. That's it for today. Have a great start to your new week. Talk to you later. Bye-bye.